Hey, it's time for another quick minute video on all things regarding the purchase or sale of a small business. Hi, it's Jason Dower here from First Choice Business Brokers in Phoenix, Arizona. I love helping to structure deals. Today, let's delve in deeper into the nuances of stock transactions versus asset transactions and explore their broader implications for both buyers and sellers in a business sale. In a stock transaction, the buyer acquires ownership of the existing legal entity with which the business operates, including its assets, liabilities, and ongoing business operation. This comprehensive approach provides continuity and preserves the company's existing contracts, relationships, and legal structure. Under a stock transaction, the legal entity and the business conducted from it doesn't change. Only the ownership of the legal entity changes. You, the buyer, are buying the stock or membership interest of the legal entity. However, it's essential to recognize that in a stock transaction, the buyer inherits any existing liabilities or obligations associated with the business. These include debts, legal disputes, or regulatory issues that could potentially impact the buyer's financial position and future operations. One way to exclude these liabilities is to have the seller settle those liabilities prior to closing, or have the seller indemnify the buyer should those liabilities surface and be payable by the buyer in the future. You should always have an attorney craft and review the provisions around this in any business sale agreement. Okay, so let's contrast this with an asset transaction, which involves the purchase of specific assets and liabilities of the business rather than the ownership of the entire company. In this scenario, the buyer will create a separate legal entity and use that entity to purchase specific assets or assume specific liabilities of the seller's legal entity or company. This selective approach allows the buyer to cherry pick desirable assets while avoiding unwanted liabilities or obligations. Asset transactions offer greater flexibility and control for both buyers and sellers, as they enable parties to tailor the transaction to their specific needs and objectives. Sellers may choose to retain certain assets or liabilities, while buyers can focus on acquiring assets that align with their strategic goals and priorities. So why does this all matter? The choice between a stock transaction and an asset transaction has significant implications for taxes, legal considerations, and the overall structure for the transaction. It's essential for both parties to carefully evaluate the pros and cons of each option and seek professional advice to determine the most suitable approach for their unique circumstances. Ultimately, whether you opt for a stock transaction or an asset transaction, understanding the differences and implications of each can help you make informed decisions and navigate the transaction process with confidence and with clarity. By aligning your strategy with your goals and your priorities, you can position yourself for a successful and mutually beneficial transaction outcome. And as always, if you have any questions or want to discuss your specific situation, please reach out and give us a call. Thanks for listening.